The stock market isn't just some abstract concept reserved for Wall Street wizards and financial gurus, it's much more accessible than you might think. It's essentially a giant marketplace, a virtual arena where buyers and sellers come together to exchange value. And what are they exchanging? Well, they're buying and selling tiny pieces of companies which we call shares or stocks. These represent a portion of ownership in a particular company. When you buy a share, you're not just making a transaction, you're actually becoming a part owner, albeit a small one, of that company. You now have a vested interest in their success. Companies sell shares to raise money, capital that they need for big projects and future growth initiatives. This could be for things like building new factories to expand their production capacity, or launching innovative new products that will disrupt the market and capture consumer attention. Now, if the company does well and executes its plans effectively, your shares can go up in value, reflecting the company's success. And, as a shareholder, you might even get a slice of the profits. These are called dividends, and they're a direct return on your investment. The stock market acts as the central hub, connecting buyers and sellers in a seamless and efficient manner. It's a dynamic and ever-changing place where millions of trades happen every single day, influencing the global economy. From tech giants pushing the boundaries of innovation, to small businesses serving local communities, it's all about ownership, a stake in something bigger than yourself. It's about growth, both for the companies you invest in, and for the overall economy, fueling progress and innovation. Understanding the basics of the stock market can open up a world of opportunity, empowering you to participate in the growth of companies and potentially build a more secure financial future. Let's jump back to 1600s Amsterdam, where the Dutch East India Company, VOC, changed everything. They sold shares in their company, letting ordinary people invest and share in the profits and risks. This was the world's first official stock market, the Amsterdam Stock Exchange. Suddenly people weren't just trading goods, they were trading ownership in businesses. But markets can get wild. Remember Tulip Mania? People traded fortunes for tulip bulbs, and when the bubble burst, many lost everything. The lesson? Markets are driven by emotion as much as logic. The Amsterdam experiment set the stage for modern investing. We're still learning from those early booms and busts. The stock market idea, a revolutionary concept for its time, spread rapidly across continents. It was an idea that promised to unlock capital and fuel economic expansion. First, it took root in the bustling financial centers of London and Paris, where merchants and investors eagerly embraced this new way of doing business. Then, carried by sailing ships across the vast Atlantic, the concept made its way to the shores of America, a land ripe with opportunity and ambition. In 1792, a pivotal moment occurred. 24 visionary stockbrokers, recognizing the potential, gathered under the shade of a buttonwood tree on Wall Street. There, they formalized their commitment to fair and transparent trading practices and signed the Buttonwood Agreement, a document that would shape the future of American finance. This agreement marked the humble beginning, planting the seed for what would eventually become the New York Stock Exchange, a cornerstone of global finance. Early trades were primarily focused on bank and insurance stocks, reflecting the nascent industries that were driving the American economy at the time. These investments played a crucial role, helping to fund America's rapid growth and expansion, fueling infrastructure projects and industrial innovation. No fancy tech, no complex algorithms, just paper, ambition, and a clear vision of what could be achieved through collaboration and investment. The core purpose was simple: to connect businesses in need of capital with individuals who were willing to invest their resources and share in the potential rewards. Wall Street started small, a humble gathering of individuals with a shared goal. But its core idea, fueling progress through investment, was powerful and transformative. This simple concept became the bedrock, the very foundation upon which the world's most influential and dynamic market was built. From a single tree to a global powerhouse, the journey has been remarkable. It's all about building the future, one share at a time, one investment at a time, one dream at a time. The NYSE grew as America grew, intertwined and inseparable, each fueling the other's success. Brick by brick, investment by investment, the financial landscape was transformed. That humble beginning, that simple agreement under a tree, ultimately changed the world, shaping economies and connecting people across the globe. The stock market isn't a smooth ride on a well-paved road. It's not a leisurely Sunday drive. Instead, it's a wild roller coaster, full of unexpected twists, turns, and sudden drops that can leave you breathless. The Roaring '20s saw stocks soar to unprecedented heights fueled by optimism and seemingly endless growth, but the infamous 1929 crash wiped out fortunes in a matter of days, a stark reminder of the market's inherent volatility. This catastrophic event triggered the Great Depression, a period of immense economic hardship and widespread unemployment. After the long and difficult years of World War II, the stock market fueled a new era of prosperity, driving economic expansion and creating opportunities for many. It played a crucial role and helped millions of families build wealth and achieve the American dream. But bubbles happen with alarming regularity. Like the dot-com mania of the late 1990s, a period of irrational exuberance when internet stocks skyrocketed to unsustainable levels, driven by speculation and hype, before inevitably crashing back down to earth. Each boom and bust cycle teaches the same valuable lesson, that hype fades and market sentiments can shift quickly, but solid businesses with strong fundamentals endure the test of time. The market, in many ways, reflects our collective hopes for the future and our deepest fears about economic uncertainty. Despite the inevitable downturns, it always demonstrates resilience and bounces back. Investing successfully isn't about luck or trying to time the market. It's about cultivating patience, understanding the inherent risks involved, and making informed decisions. The roller coaster of the stock market never truly stops. It keeps going up and down. But smart investors understand this dynamic and hold on for the long run, weathering the storms and reaping the rewards over time. So why should you care? The stock market shapes your financial future. Companies you use every day, Apple, Microsoft, Amazon, raise money here to innovate and create jobs. For individuals, investing in stocks or funds is a powerful way to build wealth over time. It's not about gambling, it's about steady long-term growth and smart diversification. Even small, regular investments can grow thanks to compounding. The market connects businesses needing capital with people looking to grow their savings. Don't be intimidated. Learn, engage, and make the market work for you. It's your market, your future. So take charge.